All right, partner. Do you know what we're going over today? Well, you probably do because it was in the title and in the thumbnail, and I'm about to say it right now. We're going over Silver Bullet. Okay, Silver Bullet. Okay, it's basically a 60-minute interval through within a certain kill zone that will form a high probability setup. Okay, we're going to be going over each one of those 60-minute intervals for each kill zone. Asian doesn't have a silver bullet. Okay, keep that in mind. Asian doesn't have a silver bullet. We're going to be going over the New York AM silver bullet, the New York PM silver bullet, and the London silver bullet. Okay, first New York AM. Okay, first of all, New York AM silver bullet starts at 10 and ends at 11. That's your 60 minutes right there. So that little box right there, that's your interval right there. Whoop, that little box. This is your silver bullet, your New York AM silver bullet. Okay, 10 a.m. to 11 a.m. Okay, remember for New York time. See that? See that? Not Lima, not Chicago, not Bogota, not San Salvador, not Mexico City, not Denver, not Vancouver, not Phoenix, not Los Angeles, not Anchorage, not Honolulu. None of that. Not Lagos, not Tunis, not London. Right there, UTC -4, New York. Okay, that's the time you want to use. Just for easier reference, that right there is the time you want to use. All right. So looking here, okay, just looking here. From 10 to 11, right? During that 60-minute interval, that's where you would want to start looking for a trade. That's when you will begin your analysis. You can I'm not going to say begin your analysis, but you can obviously have, a prep, right? You can like prep before the silver bullet 60-minute interval, but what you must do is you must have your trade in between that 60-minute interval. You must place it in between 10 to 11. Okay. I'm not saying that you have to place it and then get out of the trade in that same interval. Most of the time, it's not going to do that. Sometimes what it'll do is you can place the trade in that same interval and then exit, further out. So if you have a target all the way up here and price later hits it all the way at 12 o'clock, that's still a silver bullet trade because you took the trade within where the high probability setup formed. So this is where your high probability setup performed, and you can hold it outside of that time. So you can hold it all the way to 12 o'clock if that's how long it takes to get your target. But you must place your trade in between that 60-minute interval. But enough yapping. Okay, let's get to our analysis and look at what happened during the silver bullet. First off, what do we do? Oh wow, we came to this point of low resistance liquidity. Okay, see that? Still side liquidity, low resistance. Came and smashed it. Bang! Oh my gosh, look at the bodies. Wow, closed above all the lows too. All the lows. This one, and that one. So that's institutional order flow. That's showing that some entities in the market, man. Okay, what do? We immediately head back up. Bang! Have a market structure shift. So price wants to go higher. There's no fair value gap here. Okay? But what do? If we zoom in, we really zoom in and pay attention. Do you see that right there? Do you see that? That's my favorite confluence. Do you see that? That's the immediate rebalance. Right there. This candle, that candle, and then this candle coming right back down and filling the fair value gap. That was getting created. So once you see that, you could take that as your entry. Okay, that's your silver bullet right there. Bang. Okay. What can you do next? You can set your stop loss. I don't know, probably at like a lower time frame for value gap, or you can keep it right there at the candle's bodies. Simple. You can keep it right there because that's a good institutional reference point. Where do you take it? Right there at that high, or did you forget standard deviation with immediate rebalance? Okay, if it's a bullish immediate rebalance, you take it from the last two candles ranges. Okay, that's what I do with standard deviation. Right, if it's a immediate rebalance and you're using standard deviation for the immediate rebalance, you draw it from the last two ranges of the candles. The total range from the last two candles that create the fair value gap, or the first two candles that create the fair value gap, you want to take that from the bottom to the top, and then look what we do, standard deviation. Where's that one level resting above? Where is it at? See all those eyes there? See that? That's where the one level's resting. See that? And if we look, right, let's do it. Okay, we set our entry right at the immediate rebalances right there. We have our stop. I don't know, right there at the candles, where we can do this low here, since that's where we're drawing standard deviation. And then bang, to risk to reward. Or if you didn't see the immediate rebalance, you probably would just want to take the 2022 model or the market structure shift. Sure, you can do that also. Okay, you drag it down here to that fair value gap. Look at that. Now it's at 3 risk reward because why? You took this fair value gap in between this order block. That's a change of state of delivery with a market structure shift and a higher time frame immediate rebalance. So that is your high probability setup. You don't need a lot. With silver bullet, you don't need a lot. He says it before. You don't need a lot for silver. It's very simple. Okay. Because did I do a lot here? Not really. I didn't do a lot. All I did was, standard deviation of an immediate rebalance with a market structure shift and a previous liquidity purge. And that's really it. And then you take your entry either at the higher time frame immediate rebalance or at the change of state of delivery right here. And that's what you could have did here. And that would have provided you an easy 3 risk roll. And if we draw it out to that first standard deviation, did it come into it? Let's see. Bang! Right there. Beautiful. Absolutely beautiful. And then the PM silver bullet would have been around here, but it wasn't really anything good. So that's why we're going to go to another day to see another PM session silver bullet. But overall, this is a pretty good trade. Look. Because where was the first standard deviation resting? Right above all these highs. See that? Short-term high, short-term high, short-term high, short-term high, short-term high. Major high there. And it's resting all above that, so that first standard deviation is a good target. And if you notice, it came right up to that standard deviation, did what? It stopped. Market literally stopped. It didn't go any further than it. If you look, it barely poked above it. It barely poked above it. So that shows that was a pretty good target to target. That was a good trade. You did well. Okay. Anyways, next day, you know what? Let's go to, I don't know, 3 minutes. And we're going to go, that was AM. Okay. Now we're going over the New York PM silver bullet, which is 2 to 3 p.m. during New York time. So let's go over that, shall we? All right. We're on Wednesday, October 2nd, which was yesterday. What's the date today? Let's see. Oh, the 3rd. Okay. So this is literally yesterday, or yesterday of the day that I'm recording and or uploading this video, because I might just upload it the next day after I record. But enough of that yapping. All right, so 2 to 3. Okay, understand that. 2 to 3. That is the New York PM circle. Okay, so if you do that right along there, what is that 6-minute interval? What do we want to find within that 6-minute interval? We want to find an entry. We want to find a good setup. So within this time there, we want to look for a setup or some sort of entry that we can use. All right. And remember, I forgot to mention this before we continue. For the silver bullet, for the 60-minute interval that you're trading, or the silver bullet, whatever you want to call it, you want to use the time frames 5-minute and lower. Okay, so 5-minute, 4-minute, 3-minute, 2-minute, 1-minute, 45-second, 30-second, 15-second, 10-second. All those time frames you can use for silver bullet. Okay, 15-minute and higher, it's not advised. So if we go into this, right along here, we look, oh my gosh, wait, this point here got purged right there. So seeing that, it's like, okay, we purge liquidity, but what do we do after it? Come right back up. Is there a market structure shit? Wait, is that a swing high? Wait, let's zoom in. Is that a swing high? I can't even see that. Wait, hold on. No, they're right next to each other. I was gonna say there's a market structure shift, but there's no market structure shift. All right, but there is one there, right there with that high market structure shift there, and then that's your fair value gap because most of it is in between this price leg here. So that would be a good fair value gap to take. And if you notice, right at 2 a.m. I mean 2 p.m. What does it do? Comes right back down and touches that fair value gap. So there's your entry right there. Well, there's nothing there's nothing else we need to do. Okay, nothing else we need to do. Remember, you can use anything for the silver bullet. Whatever satisfies you, whatever you like to use for the silver bullet, whatever you like to look for, you can use. It can be inversion fair value gap with SMT. It can be turtle soup. It doesn't matter. It truly doesn't matter. Because you could have took the turtle soup down here, but was that in silver bullet? Nah, it wasn't. What was this during lunch? I think that was during lunch. But right here during the silver bullet, you could have caught that fair value gap right here, right when it came into it. Do you see that? Wait, did it come into it right here? Yeah, it did. But there's your fair value gap. You set it at the low of the fair value gap down there. And then where can you target? Oh, wait a second, hold on. Because where's our price leg? Our previous price leg? What are we doing here? Up. Here we go. First standard deviation. Uh-oh, where's it at? Right at those highs. Is that a good target? Yup. It is. So you could target that first standard deviation. And that provides you a nice, close to exact 3 risk reward. Did it hit it? Yerp, 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 yerp. It did exactly that. Pretty cool, isn't it? Very, very cool. Very, very cool. So that is the PM silver bullet. Okay. Now let's go to London session, shall we? I think something good happened during London session today, so we're gonna go scroll back. That sounded super slow. We're going to scroll back over here during the London session, and the London silver bullet is from 3 to 4 a.m. Okay, during the London session. Okay, so 3 to 4 a.m. New York time. We draw a little box, just to highlight the area we're looking for an entry. It's here all the way here. So that's the interval right there. Okay. Now, as soon as let's draw this over a little bit because that is not right. There we go. 3 a.m. There we go. 3 a.m. comes in. It's like, oh boy, we're seeking liquidity. Let's do this, rah! And we start going down. Okay. During this little macro here, 250 to 310. What do? We take out that low, causing a what? A structure shift. And then we have this order block here with a fair value gap. So there's our market structure shift and a change of state of delivery with a previous purge of liquidity. Okay. Actually, and an order block tap here. So we tap this order block right there, came into it, took out that high there, took out this short-term high, had a market structure shift with a change of state of delivery, and that fair value gap will be your entry right there. Like I said, we are just going over an example of what you could have took. Okay. We're not saying this is what you should take. Okay. But you're looking for a entry in between this time here, in between that 60-minute interval. Okay. Now if we draw a sell position there, bam. Okay, we set it right there at the fair value gap high. Bam. Uh-oh, did we do standard deviation? No, we didn't. We did. We did. Bam, right there. Okay. Oh, where's the one? Right below that low. So you can target the one. Where's the two resting? Close to that. Where's the 2.5 resting? Right below those low resistance liquidity lows there. So you can target the 2.5. Does it come and hit it? Yerp. Yes, it does. Sure does. So that 2.5 there would be your target. Did it hit it? Beautifully. Yes, it did. Absolutely beautiful. Yep. Silver bullet is a very simple concept. Like I said, your entries are not limited to what I just showed you. You can use a lot of things. You can use volume balances. You can use the indigo entry mode, which I'll be going over soon. You can use really anything to your liking, anything that you see, because you might be an ICT trader that's like I trade anything I see, and that's like me. Because when I see something, I'm like, okay, I'm taking this. It looks good. All the confluences are following each other. They're confirming each other. Okay, it looks good. We're going to take this. But yeah, this is Silver Bullet. I hope I gave you a pretty good rundown over it, and I'll be seeing you guys later. Peace.